If you're someone that's looking to buy or sell real estate in the Des Moines area market and you're sick of just the normal data that everyone's giving you and not understanding how to take action with that data, we're going to go through what the data actually means and how to take action.
This is Invest Iowa and Darson Grantham show.
A couple things I wanted to touch on was a lot of people talk about days on market. A lot of people talk about median sale price, and a lot of people talk about like resale versus new sale. So we're going to go through those general market data, market stats, and how you as a consumer, whether you're buying or you're selling, can really make sure that you're looking at that data with open eyes and not just taking someone's word for what the data means or they say that it means. Days on market. The definition of days on market is basically just how long does a property sit on market before it sells on average. So we've all heard stories of something that sits one day and then is sold the next day, or something that sit for 180 days and then it expired and no one bought the property. And why does that happen? And how does general data, how does that come into play with general data? And so it's a stat that every single market talks about nationally and locally. And I would argue that it only actually matters for the type of property in the area that you're looking to buy in. Whether it's a neighborhood as small as Beaverdale or a block as small as 19th Street, even if it's like a certain school district, Johnston School District, that is where you should look at where days on market actually matters. And if you're looking at a property that has been on the market for a period of time that's longer than days on market, you know that property has either something wrong with it or it's overpriced.
So what can the data tell us from today's market?
So today's market, it is the days on market is going up, right? So it started probably 6-7 months ago when the market was really hot. We were at like a 3 or 4 days on market, like
3 days in market.
3 days on average on market, right? And that was for resale. And we'll get into resale versus new home sales. But resale market is different than a new home sale market, and we'll get into that here in 2 more questions, right? But a resale days on market at 3 days, that's the average. Right? If you think about that, that's how hot the market was. Now I think we're at 14. I could go look here, but it's around 14 days on market on average. So that means half of the properties sell before 14 days and half of them sell after, right? So as a seller, you're trying to determine, hey, is my property overpriced or what's wrong with it if your property is on the market longer than that 14 days? And that's looking at all of the resale properties. If you just look at the certain segment that you're buying in, I say segment under $200,000, is going to have a different days on market than 200 to 400 or 400 to 600 or 600 plus thousand. So those are all different market segments that have a different average days on market. Same with your neighborhoods, your Beaverdale. What is the average days on market for Beaverdale? And then you can evaluate, hey, as a seller, is my price overpriced or underpriced? Or as a buyer, is this property that I'm looking at overpriced or underpriced?
What's the percentage of new build homes in perspective? How many new build homes and how many resell?
So if you can't, to answer your question, new homes, actually this answers the question. Homes for sale, 37% are existing homes, and it looks like 44% are new homes. And this is single families. So condos, townhomes are in their own categories on this data. And so those of you that are watching and looking at this data, we see Les Sulgrove down in the corner, because this is data from Simply Des Moines. Les Sulgrove puts it together, puts it out for anyone in the Des Moines real estate market to absorb. I love using his data when I sit in front of clients because he does such a good job of constantly telling the story of the Des Moines local market. And so I try to take it and then interpret it in my opinion, in my stories, and then give it to clients to help them realize what the best practice for their decision is.
So there's currently a lot of new home builds.
So currently there's 1,200 new home builds and there's just over 1,000 existing homes. So you have more new home builds and existing homes. My struggle with doing kind of a total market. So as you can see there, 15 days on market is the total for all homes. I struggle with using that data to help someone understand how long their property should sit on the market if they're trying to sell it, or if you're a buyer trying to buy something, is that new homes can get put on market when they aren't even, there's no basement in the home, right? So yes, you can sell a property before it is built. It is possible, but it's going to usually take at least 90 days to build a house. So all your new homes are going to be on market for at least 90 days. So that skews the data drastically. So that next bottom down is existing homes. That's 14 days on market. And then you have the new homes average is 82 homes on market, or 82 days on market. So that's why, like, new homes, 82 days, that makes a lot of sense because it takes 90 days to build a house.
What can you tell me about the condos and townhomes?
they're very niche markets. You're really buying into the association and the community, and the school district doesn't matter as much. The location usually doesn't matter as much. At one point, it was the hottest market, and I remember when in 08, 9, 10, I was just jumping out of college and looking at the real estate market, and condos and townhomes were the worst asset to own. They got hit the hardest in the recession. So that's what I know about it. Has a lot to do with the association.
Okay.
That's a whole different podcast.
What can you say about the future for the market? Is it going to go towards a seller's market or towards a buyer's market?
So I'm glad you said that. So as you can see in the middle of the slide, you have market favors. So you have all properties. It says it's an even market. And the way Les goes, and he runs his data, is off of the national numbers and the national averages. And so existings is a seller's market. So if you're buying an existing home, in general, it's a seller's market. Condo, existing, townhomes, also seller's market. If you're a new home, it's a buyer's market. If you're a new condo, townhome, it's a buyer's market. So that means a buyer's market is going to be something that is on market longer than, the average days on market is longer than 3.
What are months of inventory?
Months of inventory it's a pointless calculation that tells a general sentiment of the market. So basically, if no new properties came on the market, we look at how many properties sold last month, and you take the number of existing properties and you divide it into it to get a 4.6 months of.
Well, it's an estimate.
It's an average, right? So it's a hypothetical of no properties came on the market. How long would it take if we continue the previous sales pace until we ran out of inventory? It will never happen. It's a dumb stat, but it does give you an idea of basically the velocity of sales.
Year to date
Closed sales. This impacts basically the supply and demand of properties. It really, to be honest, impacts realtors more than anyone, because, or I guess people that get paid based on transactions, because when you have a closed sales number that is low, fewer realtors get paid because you have fewer sales, right? And so last year, I believe our year-to-date closed sales was around 17,000. So we're 1,500 houses or units fewer are being sold this year as opposed to in 2021.
That year to date, because this date is for January 1st. It was last year total?
Yep. Yeah.
Okay.
Total. I believe these numbers are 2022 totals.
The majority of the existing, so the 10,654 are existing homes on year-to-date closed sales.
Yes.
So the majority of the transactions come from existing homes.
Yes.
What about the median sale price? Is that something that is to change?
Oh, it's always going to change. It's a median.
But what do you think is going to go?
I don't think it'll go down more than 5%. I don't think it'll go up more than 5%. That'd be my just general guess of the market.
Is this?
We're talking year over year, right? So I do think that it'll go up more than 5% between January 1st and May 1st.
Right.
Or June 1st would probably be better. So if you look at the way the real estate trends is, you close 60 days after a property is put under contract. So properties that are purchased today, January 1, are usually closing at a lower price point, which is March 1st, than properties that are put under contract on April 1st and close June 1st. Because you have a spring market. People want to buy properties in the spring. Weather's changing, school's over, you're going to close in the middle of summer, you're going to move in the summertime. It is just an Iowa trend. I'm sure it's the same way in other markets, but you see it drastically in Des Moines.
So we're going away from that buyer's market where the transaction average is lower.
I would still say it's going to be, when you say going away from a buyer's market, help me understand that. What do you mean? What are you asking?
Is this something that affects people at making decisions, and does this stop people from buying homes, or it's just something that just happens? Do people stop buying homes during the winter just because the price is higher and it's colder?
People stop buying houses in the winter because it's colder, typically, not because they're higher. Because they're typically lower.
They're lower.
The prices are lower on average, universally. In Iowa, your property prices, if you look at a map, the prices are always lower if you put a property under contract December, January, February than any other time of the year. So I would say, if you're going to sell a house and you have a choice of when you put it on the market, you don't put it on the market on Christmas Day or on January 1st. You wait until springtime and spring market, because it's going to be better. On average, your risk is a lot lower by doing that. But if you have a job change, or you are moving, or you need to be in a different school district and you have to move in December, put your house for sale, and knowing that you're going to get a little bit less than what you would got if you would have put it on for sale in April 1st.
What else can that slideshow tell me that I should know if I was going to buy a house within the next 3 months?
I don't think there's anything here that's going to like tell you to or not to buy a house. Like to me, like you need to figure out what you want, what neighborhood you want, what type of house you want, and then you dig in, you take all these data specific to that specific property or type of property or area.
And then
Make
based
a
on
decision.
numbers.
Yeah. Right. So like you need to figure out what you want. This should never help you buy or not buy a property.
So what helps you buy a property?
You need to like this data specific to the type or place of property that you want to buy or sell. So if you want to sell, you need to know what is your competition, how fast are they selling, what are the price points, what's the median, are we above median or below median for the area that we're in? Are we the shitty house on the block or are we the nice one? That's going to come into play when you go to sell your house.
Because I'm sure that when people hear that, oh, it's a seller's market, a lot of people get scared by the fact that they hear that and then probably don't make a decision.
Right. So it's a seller's market. It can change annually, right? So it might be a buyer's market in 3 months, 4 months, 6 months. A seller's market simply means on average, it's going to be at a seller's, like they're going to have more of an upper hand. Now that's on average. So that's looking at how many 15,000 home sales this year or this month. I think we sell it's like 1,200 houses close per month. We have quarterly, fourth quarter, year-to-date closed sales from 2017 through 2022.
Fourth quarter of the last 3 months.
Yep. So last 3 months of every year from 17, 18, 19, 20, 21, 22. So you can see 2017, 14, 60 was the end of closed sales in the fourth quarter. That's total for the year. It's year-to-date closed sales. It's not total closed sales for the fourth quarter. And so you kind of see like what are the two outlier years? You have 20 and 21.
2021 because
Right?
of COVID.
Yeah.
No,
Slightly COVID. It's COVID. It's a number of things. Like COVID, yes, but its interest rates were so darn low,
Yeah.
right? People also wanted to move because they didn't like the house they were being locked up in during COVID, right? So you have a lot of factors that went into that. But when you look at this, basically, are we having a bad year in 2022? To a general consumer, it's worse than last year, but it's better than
the average.
the 17, 18, and 19. On the same fact, the closed sales makes no difference to a consumer. Zero. Shouldn't. They don't care. They want to know the house that I want, how many of those have sold in Beaverdale, right? So I want a 3-2, 1,500 square foot in Beaverdale. I'm using Beaverdale just to stay consistent wherever you're going, right?
Yeah.
But like, how many of those houses closed year to date in the fourth quarter of each calendar year? If you know that, you know how often that property, if it comes up, it's going to sell quick or it's not going to sell quick. Because that's 3-2 and 1,500 square foot in Beaverdale. Like that's pretty rare. Most of those houses are not 1,500 square feet. But if you said 900 square feet, a 2-1, there'd be a lot more. So that's more likely to come on the market and be a property that I want to buy.
So closed sales is not something that people should worry about, right?
No,
But
a general consumer, yes.
But interest rates,
Okay.
is something that they should worry about.
You should worry about. You should use it as a calculation.
Use it as a calculation, but for the foreseeable future, what does that look like?
Okay, now we're going into a whole different world, but I'm happy to talk about it. Interest rates, it is a tool to make a house more affordable or less affordable, right? So if you think about it, if you like take a step back, before banks, you just had to pay cash for a house. So now you are using a bank to purchase a house, purchase something that you don't have cash for. You have to pay someone for that ability to purchase a house that you can't afford. That's called a loan. It's called debt, right? So the interest rate being higher, that person, which is the bank right now, is saying, hey, you have to pay us a higher percentage if you want that privilege of buying a house than what it was a year ago. That's it's fine. You just have to take that into consideration. First-time home buyers, if you have a 7% interest rate, which is roughly it's probably less than that. It's probably 6.5 right now, 6.5. If you use that interest rate and you try to compare the monthly payment that you're gonna have for the house to your apartment, what's better? What would you rather have?
Probably the apartment.
I don't know. I don't care. I'm the dumb realtor that says I don't care whether you rent or buy. Just make a smart financial decision to build your wealth, right? I would argue if you want to live in an apartment, go buy a duplex and live in one side and rent out the other. You've had the house hacker conversation on here before.
Yep.
Like I've helped dozens of people house hack. I house hacked. Smartest wealth building tool you could use. But it's not for everyone. I get that. So the interest rate question, 6.5 to 7%. Does it matter? Yes, of course it matters. Is it better than renting? Maybe, maybe not. If you're trading from a 3% interest rate right now because you live in a $300,000 house at 3% interest rate, and you want to move into a $500,000 house, that, and I don't know the exact numbers, but that mortgage payment from a 3.5 or 3% interest rate at 300,000 to a 6.5% interest rate at 500,000 is drastic. It's a huge jump in monthly payment. So I think that's going to stop the person in a $300,000 house from selling. So it curbs demand or it curbs supply because that person's no longer going to sell. They're going to say, hey, call up a contractor. Let's just make an addition to make this house bigger. Right? Like you're going to have more people think that way because it's like
it doesn't make sense for somebody.
Right now, people always say like you purchase on you purchase on emotion and you justify it with logic or something, but vice versa, right?
Yeah.
Like it isn't. Buying a house is still pretty emotional. It shouldn't be, but it is, right? I say it shouldn't be. A good financial decision should not be emotional. It should be like, these are the stats. It's the risk I'm going to take. This is what we're going to do. But like a lot of people that look at their money are going to say, hey, should I just make my current $300,000 house better or should I go buy a $500,000 house? I don't know. The other question is, do you have, $50,000, $75,000 to renovate your current house? Because that's what you need to make it how you want. If you don't have it, then what is the current pain point in my $300,000 house?
Are there any updates, anything that is going to change drastically in the next quarter?
I have I try hard not to
think too much about that.
No, do like brash, bold decisions or crystal ball things, right? Because there's so many factors that goes into housing. Prices, area, like the perfect property could come up. And if you're not ready to buy, but you know what your perfect property is, like you missed out. And maybe it's, you only see one or two every year. Like that's possible if that's your situation. You just need to know your situation. I listen to a lot of Gary Vee, and it's like, he always talks about like being self-aware of your skill sets, of what you're good at, what you're not good at. So if you're home shopping or you're home buying would be a better example. You need to know what are the odds of the property, my perfect property, come up, and what am I willing to pay for that perfect property? If you're not that, you don't have a big, reason to move, you're probably not going to move. Like that's where we're at right now. The last 2 years, everyone was moving for any reason because you could get a lower interest rate and more house and keep your same payment. That's great. That's no longer the case. So you have a supply that's lower because people don't want to move. You have a demand that people would argue that like the demand, it's went down, but it hasn't went down as much as what everyone is telling you. Every realtor I know has way more buyers than they do sellers. Way more. Every realtor you talk to, next to realtor you talk to, ask him, do you have more buyer clients or seller clients?
Buyers.
Everyone. I mean, I wasn't around during 8, 9, and 10 in the real estate, downturn. At that point, everyone had sellers. So like the fact that this says it's a seller's market, I mean, I'm going to agree. Until I find more sellers on my lead sheet than buyers, it's still a seller's market.
Definitely a buyer's market or more of a seller's market.
It's a seller's market.
Seller's market.
No question. I mean, it's been a seller's market for a while. Even, before COVID, it was pretty much a seller's market. The market data, the data is good. You need to just make sure you're not listening to the national averages or even the Des Moines in general, like data. Like days on market for Des Moines is irrelevant to someone that's buying specifically in a certain area or a specific type of property. Doesn't matter. Go figure out what exactly you want and watch that data and that trend so that you can make a smart wealth building decision instead of scared for no reason. Like fear is basically the unknown, right? And so you see data and you're like, it's super scary to do X, Y, Z. Is it? Or do you just not understand the risk or understand how to prepare for X, Y, Z? So like buying or selling. Do you have a house that you need to sell? Can you wait till May? No. Then sell it today. Market it really well. Get in front of as many eyeballs as you can. Not just post it on the MLS. Get someone that markets it really well. Analyze it and make it appealing for someone to buy. It will sell tomorrow if you do all that. If you overprice it, it won't sell tomorrow. If you underprice it, it sells yesterday. I'll find someone to buy it. Everyone has buyers. That's the truth. That's a good kickoff for the Monday market.
Yeah. You want to do a conclusion? Oh, you're not a big fan of conclusions?
I don't like conclusions.
No.
Here's the deal. And you can leave this in here if you want. I hate conclusions because y'all just listen to the whole thing If you like either of our stuff, go to our channels and go watch it. Go listen to it. Go consume someone that knows what they're doing, not national media, not big media. Like, I don't need a recap. We went over median sale price, days on market. That's irrelevant because you already listened to it.
If you find this helpful and you think that this information that we're providing has some sort of value to what you're trying to do in the future, please subscribe, hit the like button. It really helps us to promote more of this content, and go and subscribe to Darson Grantham's channel. Cool?
Yes. We'll see you next week.